Token Metrics family. Thank you for tuning back into Crypto Deep Dive. This is your host, Mehdi Farouk, Senior Investment Analyst at Token Metrics. Guys, so one of the requests we had was that I was covering a lot of blue chip companies that have higher valuation and hence might not be able to do 50x, 100x. So I had a lot of requests where you guys, where Token Metrics family wanted me to cover a project that potentially has 50 to 100x potential, but also give you guys an index exposure to the whole crypto sector. So today we have one project which I personally think has that potential. It's a small cap gem built on near protocol and also gives you exposure to near protocol. So without further ado, let me just discuss this project, which I find very fascinating. So the project is called Octopus Network. So the token ticker is OCT. You can buy it on gate.io. And it's one of the small cap gems to watch out for in my humble opinion. So what is Octopus Network? So Octopus Network is similar in many ways to Polkadot and Kusama and Cosmos, but has a very low valuation. So the catch-up play could be very interesting. So let's say you have near protocol over here. This is the platform where Octopus Network will be building. So on top of a near protocol, Octopus Network resides, and it basically has many different smart contracts launched on near protocol. And then you have different app chains. App chains are customized blockchain that are built using substrate technology. The substrate technology is a similar technology used by projects deploying on Polkadot. So in other word and simple word, any project that is being built on Polkadot can launch on Octopus Network. Now you'll ask me, why do they want to launch on Octopus Network and have their own customized blockchain? The reason being that in Polkadot, the auction costs are significantly higher. In many cases, you might require somewhere between 30 million to, let's say, 200 million to basically secure a parachain, secure a blockchain in Polkadot, and then Polkadot can give them security. But in case of Octopus Network, the cost is very low. I think the limited cost is around $2 to $3 million. So in this way, a lot of projects that cannot deploy on Polkadot because of this resource constraint can basically deploy on Octopus Network. So this is the value proposition of Octopus Network. It gives out of the box security to different blockchains. Now these blockchains, guys, are very customized blockchain, and they provide very specific function needed. So for example, one app chain might require customizability, and let's say this blockchain is a gaming blockchain. So in this case, it will require less security, but will require more transaction speed and higher throughput. But there might be another blockchain, which is an NFT marketplace. It will require slightly higher security, but maybe slightly lower transaction speed. So in this way, a developer can customize blockchain in regards to their own specifications, in regards to some of their own requirements. And this is the reason why deploying multiple blockchains is necessary rather than building one blockchain and having all the apps there. So what Octopus Network does is it basically allows developer to focus on the business logic, just like Polkadot. It also provides all these app chains interoperability. So any app chain built on Octopus Network can communicate between each other and can also communicate between applications built on top of near protocol. So you have different bridges in near protocol, you have DeFi protocols, and so on and so forth. So it can acquire all the DeFi capabilities of near, and it can also acquire a lot of bridges from near. Let's say a Rainbow bridge, which takes them to Ethereum. So what Octopus does is it gives them out of the box security, interoperability, on-chain governance, and all of the infrastructure required to basically deploy their blockchain. So the second slide basically is a summary of all of this. So you might need Appchain over a DApp because of customizability, which I described. And another thing is scalability. So let's say when you have one app chain specific for your purpose, you can have higher transaction speed per second. And because of that, you can have higher scalability. So one of the issues Ethereum has at the moment is that it's not that fast. But let's say if you're having your own blockchain for one specific application, you can have higher speed, and all of the transaction speed is just focused on that application. So the tokenomics is very simple. So in Polkadot, you have to go through the parachain auction process, but over here, you have 100 million Octopus token, and a user might acquire Octopus token and then stake those Octopus token to, let's say, a particular app chain, and when they stake it to a particular app chain, they select a validator that they want to give their Octopus token to. That validator will provide security to the app chain, and as they provide security, as a user of Octopus network, you are going to gain native tokens of that app chain. So it's basically security as a service, it's interoperability as a service kind of a protocol. And this is how the tokenomics works. So you have a security leasing network over here. So let's say you stake your Octopus network to a particular app chain validator. That validator will provide security to app chain. And once they provide security, you will get app chain token as reward. And once you receive those rewards, you can earn earnings in different tokens. So on 100x show, when I had Louis Liu in terms of our guest to kind of explain me this model, it kind of seems that it's like index exposure to whole Web3. A lot of Web3 application will be built on top of Octopus network. So by acquiring Octopus network, you're getting a higher beta play on Web3 and higher beta play on near network. So what do I mean by higher beta play? Since it's still a very low cap gem, low cap market capitalization, let's say if near network goes 1% or there's an explosion of Web3 narrative, let's say all of this increases by 1%, Octopus network price might increase by 3 or 4% because it's small cap. Now, in terms of token, so you have fixed supply over here. So you have 100 million Octopus token, but the app chain over the period of time, which is the demand side of this equation, is scalable infinitely. So you have constantly increasing demand, but a scarce supply of 100 million fixed Octopus token. So the tokenomics in this, in the utility standpoint, or in terms of how the economics is designed, I think is very favorable for token holders. One thing which I would say it's a bit iffy is the token distribution. A lot of token are being distributed to investors. There's few airdrops to community, and the app chain rewards are kind of on the lower side. But if you look at the team, the angels, the IDOs, and A round and C round, it's quite high. So one of the argument could be, let's say you have 1,000 app chain deployed in, let's say, next 4 or 5 years somehow. So let's say a particular investor early on still holds a lot of Octopus token. What can potentially happen is then when that token holder becomes a validator, he or she might use those token to basically corrupt one of the app chains. So that could potentially be an issue, especially with such a centralized token distribution, in my opinion. But it's a far-fetched problem in when it comes to that, though. So this is how Octopus network looks from overview, infrastructure overview. I know it looks very overwhelming, but I'm going to try to simplify this for you. You have Near protocol over here. You have Rainbow Bridge. You have DeFi liquidity over here, and then you have, let's say, different app chains over here. So this is the validator set. These validator sets can provide security to a lot of the app chains that are being deployed, and these app chains will be deployed on Octopus Relay, which are smart contracts deployed on Near. And these smart contracts can communicate between each other, but can also access DeFi liquidity of Near, as well as bridges of Near, which is Rainbow over here, Rainbow Bridge over here. And then you can use Octopus network to select which project you want to fund next in terms of being deployed on the Octopus Relay. And this Octopus token is also used to basically select the validators that you want in order to secure the app chain. So in the future, the Interchain architecture will look something like this, where you have all the app chains in Octopus Relay. They can speak with all the things that are being built on Near protocol, and also speak with each other. Near protocol also has Aurora EVM, which is on a single shard, but in the future it can communicate with some of the other shards, including Octopus Relay. Then you have Rainbow Bridge. Then some of the assets on Ethereum can also transfer to Octopus, projects built on Octopus Appchain in the future. Then you might have IBC Bridge that can connect Octopus Relay to some of the projects in Cosmos. A lot of Octopus also has IBC Palette, so a lot of projects will be able to communicate between each other in an IBC manner as well. But in the future, let's say with different IBC bridges, it can also communicate with different projects with Cosmos. Now they're also working with A-Star. So with A-Star, they might be able to communicate with some of the projects built on Polkadot through either a bridge or through some of the technology they're working through. And through A-Star, they can also communicate between all the, let's say, all the substrate-based projects with different Cosmos projects as well. So A-Star will be launching on Polkadot and will be trying to connect Cosmos hub towards Polkadot. So in a way, let's say if Octopus Relay Chain can communicate with Polkadot through A-Star bridge, it might be able to, from that part, can then also move towards Cosmos hub. So if you want to take a bet on multi-chain world or interoperability with a vast ecosystem, you have Ethereum, Cosmos, Polkadot, and so on and so forth, you can basically have that exposure through Octopus. So one good thing I like about is that they're not selling promises. They already have few Appchain. So one of the Appchain is called Debio Network, which is a biomedical data marketplace. So they have integrated with Kilt that allows them privacy, and then Ocean Protocol that allows them to monetize data. So it's a platform that allows you to anonymously control and monetize your genetic and biomedical data, like your genomic data, I think, which in the future could be very interesting. And it's a very interesting project. So do check it out. So that's one of the Appchain that has already been deployed on Octopus. Myriad Social is another meta social protocol. It basically allows you to monetize your social media data, like social media data from Facebook, Twitter, Instagram. So it's a layer on top of all of these platforms, and then allows you to basically sell your data to peer-to-peer advertising agencies and so on and so forth. So it allows you to take back control your data and monetize your identity and data. So those are two app chains, and I think third app chain is also being launched amongst other app chains on the drawing board. So one thing I like about it is that we already have something going on. The team is executing on the roadmap, and app chains are being deployed. And they also have accelerator, which will allow them to fund a lot of these app chains. So in terms of execution, I also like the fact that the executing is just not a promise. So when you have something which is executing, then in the future, if they start executing more, then you have this compounding and network effect of all of these execution coming together. In terms of backers, you have decent backers. You have Near Protocol, you have Digital Currency Group, you have Yobi Capital, Electric Group. So decent decent backers in my opinion. Now let's say they are trying to compete with the multi-chain narrative of, let's say, Kusama, Atom, and Polkadot. And at the moment, Octopus Network has a valuation of 230 million. And the different protocols they're trying to compete with, let's say Polkadot has 20 billion valuation, Atom has around 8 to 10 billion valuation. So in terms of return profile, even if it captures few percentage of it, I think it can do really well. Now, if you even look at the smart contract sector average, that means all the layer 1 protocols and all the layer 2 and layer 0 and layer 2 protocol average, you have a valuation of 2.9 billion, and Octopus Network is around 230 to 250 million fully diluted. So in terms of potential, there's a huge potential. So this is what I've tried to capture over here. So let's say if it captures 6% of Near protocol, from current prices, it can do 2x. Let's say if it captures 10% of Near's market cap, then you have 400% potential in terms of ROI. Same with Atom. Let's say if it captures 10% of Atom's market share, then the price can do 4x from here, and then you have significant upside. Same with Polkadot. Let's say if it captures 10% of Polkadot's market share, you have 8x return. So risk reward is asymmetric in my opinion, even when you kind of consider the valuation. Obviously, there's some risk involved with this protocol. Firstly, the risk is related to Near protocol. We know I love Near, by the way, but at the moment, actual usage of Near is light compared to other tier 1 alternative layer 1s. So in order for this project to have network effect, it will require near to have a lot of network effect. So that's a risk. So a lot of these app chains that are launching on Octopus network are by definition new projects. So these projects might fail to gain traction. And also this project has a focus in Asia. So on the marketing side, the project doesn't have that much marketing, and all of these app chain have lower traction at the moment. At the moment, it's a Web 3.0 play. When I spoke with the founder, Louis Liu, he told me that by definition, one of the complexities is that Appchain, they won't have any DeFi on their Appchain because it's not optimal for composability. So that is one of the limitations. If they won't deploy DeFi, and DeFi is one of the booming sectors in next 3-4 years, in terms of price explosion, you're kind of limiting yourself. But it kind of makes sense because the app chains are not optimized for composability. What does composability means? Composability means that, let's say, if you have one project, 5-6 projects built on top of it. So, for example, you had Curve. On top of Curve, you had Convex Finance, Yearn Finance, and on top of Yearn Finance and Convex Finance, you had priming mechanism of other projects. So you can't have that. You will have one app chain, and one app chain will have one application, and one application will be focused on one thing and one thing only. So that allows scalability and low transactions and infinite scalability, but kind of limits you on this ultra complicated composability element. For me, another issue is sourcing liquidity. So let's say it's a $200 million project, and let's say 100-200 app chain kinds of get deployed. Where do people get the liquidity to secure these app chain? At the moment, it is liquid, but it doesn't have that much volume. So there could be a crunch in that volume in terms of acquiring the tokens. When there's a crunch, that could compromise security. Another thing is that the initial backers might have large holding of Octopus, and they might be able to manipulate some of the app chain security, especially if they are early in this project. But looking at the bright side, I think one of the investment thesis for this project is it's a security and interoperability as a service play, which is amazing. You get like index level exposure of crypto, and you also get index level exposure of multi-chain and interoperability narrative, which is good. Their focus is Web3 applications, social media, so on and so forth. So you get index level exposure to Web3, which is interesting, and one of the themes I like. It's a higher beta and indirect bet on near network. Since it's built on top of near network and it's smaller in market cap, it is a high beta indirect bet on near protocol. And if you know me, you know I'm very bullish on near protocol. I think it's one of the top layer ones in terms of technology and innovation. Another thing is they have already launched 3 app chain. 2 app chains are in function, and one is about to be deployed. And they have an application chain incubator where they're trying to incubate different app chain. So team is doing really well on executing on the roadmap. And when I even spoke with Louis Liu, he seemed like he has all the technical background to help in the development of the project, and also understood tokenomics, which is great. Final reason why I like Octopus Network is the valuation is very cheap. So the catch-up can be amazing and could be large. So you have fully diluted valuation of around 230 to 250 million, and the competitors that are kind of solving the same problem, such as Dot and Polkadot and Cosmos and Kusama, have a very high valuation. So for comparison, again, Polkadot has 20 billion valuation, Atom has 9 billion, and Octopus has 230 billion. I don't see why it cannot go more than 1 billion. So for these reasons, like for all of these reasons, which I kind of say are my investment thesis, I continue to like Octopus Network. It's around 1.5-2% of my portfolio, depending on the price action. But 2% of my portfolio at the moment personally has been allocated to Octopus Network. Again, not financial advice, do your own research, but it's one of the projects I like. Hope you liked today's video. I'll share my deep dive next week as well, so stay tuned.